Stocks pointing higher as we get ready for the big election event tomorrow. That's coming up on 3 Minutes on Markets and Money. So following Thursday's sell-off after the Federal Reserve said they're going to keep hiking rates until the cows come home, markets did a rebound on Friday, coming off support at that 20-day moving average. And this was the important level of support that we talked about previously. That 20-day moving average is now confirmed support. We broke back above that from the lows that we had earlier in October. Came back above that, broke above the 50-day. Now, unfortunately, because of the Fed announcements, the markets broke down through the 50-day moving average, broke support at 3,800, but did hold support right there at the 20-day moving average on Friday. Nice rally. Now, this morning, stocks are going to open up, and we're going to retest the 50-day moving average as resistance. And, of course, that level is sitting just above where stocks are right now. So markets are currently trapped between support at the 20-day moving average, resistance at the 50-day, a very tight trading range. A breakout in one direction or the other will likely dictate the next leg of this move, whichever direction it is. A break to the downside, we're going to retest these lows from June. That's going to be a very critical level to hold. If we break down below those June lows and the recent lows, we're going to be setting new lows for the markets. And again, that could very likely occur with both an outcome of the election that we're not counting on and or a very strong CPI report later next week. However, an election outcome that is something more like what the market expects, which is a gridlock Congress combined with maybe some signs of weakness in the CPI report, could send stocks higher. And again, there's enough support here at the moment for markets to try to rally towards about 4,100 by the end of the year. Again, stock buybacks, repositioning by mutual funds, hedge funds through the end of the year. There's certainly some catalyst here to help support asset prices to move up, but there is certainly downside risk as well because there's so many factors right now between the Fed, inflation, strong employment, potential risk of recession, etc., that could push stocks lower. So again, this isn't a market to trifle with by any stretch of the imagination. We've talked about using this rally to reduce risk, rebalance portfolios, continue to do that. We were doing that last week, continue to do that this week. Use today's rally as an example, lift a little bit of exposure out of the markets because again, if markets rally, that's fine. The rest of your portfolio will go up with the market. Yes, you'll be a little bit underweight equity, but you'll be in a position to participate. If markets do break down, you'll be glad you have a little bit more cash in your portfolio because that'll help shield it from that decline. Also, too, we're very close here, importantly, to a MACD sell signal. So again, 1 or 2 down days in this market, we're going to trigger a sell signal, and that's going to suggest lower asset prices in the near term. So again, monitor the risk accordingly, manage your portfolio as well. If you have any questions, get by the website, realinvestmentadvice.com. Let us know how we can help you. That's 3 Minutes on Markets and Money. See you back here tomorrow.